Hello, everyone. How everyone doing in face this morning? Also want to welcome our viewers from investing.com. What a difference a week makes. So since investing.com, really the majority of their coverage is the equity market. I'm going to start off with the S&Ps, give a quick review of what we were talking about last week here on Face and in ForexAnalytix. So here we go. Just follow my cursor. This was the Fed, the disappointment. A lot of people looking to get short 30, 40, 30, 50 or raise cash. So the Fed, it looked like Powell fumbled the ball. Market was looking for a more aggressive cut, and we sold off. So here we were on our last broadcast right here. Talked about selling rips, and this was one heck of a rip. In fact, it was 78.6 back from here to here. You may want to write it down, technical traders. What I like about 78.6 is people that are trying to fade a move might start at 38.3, 50%. Everyone tries 61.8, and they're getting squeezed out trying fib retracements, and 78.6 seems to be one where people that are fading rallies or buying dips on retracements start to give up the ghost on that. Everyone hear me clearly? Give me a Y. Hi, Robert, Jeffrey. Yeah, we start every day a minute ago. Okay. All right. So what we have going on since then, Thursday, the tweet from President Trump about imposing more tariffs on China, and the market stalled and really gave up the ghost. We were talking about taking out 29.60 as being a sign that there's a problem, and a correction would be your first indication a correction's underway. So we took it out, and then look, rallied right back to 29.60 before the acceleration into Friday and especially Monday, which is what we did down here. Okay, so when I look at this, and I'm still hearing, the Fed's, now they're behind the curve, that's a narrative, even though we had a decent jobs number on Friday. This tells me that cutting interest rates like we did here is losing a little bit of its impact anyway, unless they get super aggressive. But more importantly is that you could cut rates all you want, but trade issues, a trade war overshadows everything that the Fed may try to do. In fact, Jay Powell talked about justifying that quarter rate cut because of potential trade wars and economic slowing in the rest of the world, because the rest of the world's more dependent upon export than the U.S. In the U.S., it's only 11% of our GDP. And for example, in the EU, it's about 34%. So another reason bunds are becoming parabolic to the upside. So what do we have since? And this is a little different than what a lot of market participants are used to, because they're used to saying, oh, the market's consolidating, but they think when the market's consolidating, it's consolidating gains. You know what we're doing here? We're consolidating losses. All right, give me a Y if you understand the difference. So I'm not saying that we can't rally back to 29.20, 29.40, but if you look at this RSI reading here, it's pretty good downside momentum. Markets rarely put in a low when the RSI is this deep and confirming the move. So we're consolidating losses, which means after the consolidation is over, there's another wave to the downside. And bigger picture, and I had this green line drawn last week, so this was my initial target at this 28.64, and it overshot it. It's back above it now, but look at what it held, barely. This is the 200-day, and we almost got to 38%. So I don't think this low is going to hold. And I don't think we get any kind of low until we take out the late May, early June low here of 27.28. So that's another, what, 5% or 7%, something like that. Hoping we don't go this deep. Then we have bigger problems, and definitely hoping that we're not getting ready to do anything like this, which is the bottom of the megaphone formation that a lot of people are looking at. Any questions on bearishness? It's my belief that for now, that will probably hold around the 50% level. That's 2683. Should be enough to create some panic. You look at the week, we fought our way back. We'll see if we could close higher on the week, but even just a measured move under here is going to take you well under 2,700 in my opinion here. Any questions on that, on the overall market? So just something else I don't do normally here in Phase, but because it is investing.com, I just want to show you a few things here. Apple. Sell rallies. Okay, massive divergence. Why can't we trade 150 again? It's a big move. Or at least 186. Apple looks heavy. So I'm looking at FANGs. Netflix looks lousy. Sell it. So rallies. Facebook. Maybe it tries to fill the gap. It looks lousy. So Goog had a great earnings week last week, but we know how it got creamed. Look at what happened and rallied right back into the gap. And this was a pretty big decline, and this was their earnings, and coming off pretty good with the S&Ps. Not sure this is going to hold the 1025. And just a couple of currency things to wrap it. I think what's happening here in US dollar yen is pretty important, because I think it's a linchpin to a lot of things that I'm considering here. Is that it's possible that we're getting a low. I know most people with their bullishness in bonds are looking for a collapse. I mean, a lot of bears are talking 90. It's possible yesterday may have been pretty good inflection low. We took out the low of the week. So far, we're holding the 88.6 level. And, why didn't we take out, I asked myself this, why didn't we take out the flash crash low? Because many things have. The bonds have taken out the high, right? Aussie has taken out flash crash low, Aussie yen, etc. And we're still holding this flash crash low. It looks like a potential wedge here. So I'm constructive on US dollar yen. Just a quick tutorial here. Okay. Possibly, even though on the 15-minute, this is an elongated shoulder, it doesn't have the symmetry. Can't say back over 630 that there's going to be some upside, I think, to 680. So the market has a pretty good memory, right? So you see this green line here? All the way here and here. So it comes in at 680. So you could say, well, 680, what's it mean? Yeah, I've seen a couple rallies fail there. But when you trade, you have to look left. And looking left, what do you see at 106.80? All right, what do you see here? 720. This is what you see. Looking left, 106.78. So the old basic, that old support turns into new resistance. So far it's new resistance. We get back above it and recapture that low. That would be a positive in US dollar yen. And just one more thing, that I think could be important before I hand it off to Blake. I think what happened yesterday in yields is important. So we had a pretty good reversal day in yields one day after a trend like that. Yeah, you know, we could go back and attack all-time lows. We did it in bonds, but here we are, though we're lower on the week. So if the yen is good, US dollar yen, if I'm right that there's a bottom, this is it's negatively correlated. So US dollar yen going up, which means a weaker yen, could send yields back up. So, you know, kind of a Nostradamus call. I'm thinking if this is a low, why can't we correct at least this decline and rally back to initially we're going to have trouble at this 220 level. But I think that's a possibility. And the last thing is just looking at the bonds themselves, still higher on the week. We had a little reversal, trying to work a little reversal with divergence. So, you know, I mean, it's premature to call it, but I think bonds were 98 before yesterday, kind of like gold is now at 98. And has gold had it? I don't know. But if I was looking for any negative with as huge of a move that we've had on the daily RSI is not confirming. So you need some negative divergences on the 1 hour. This 1 hour confirmed, which implies we could get another new high. 4 hour hardly came off. So, you know, markets rarely peak on this. To me, if you want to be bearish and you don't want to hear the ice crack, I'll attempt a short at new highs with non-confirmations. But if we get back under this 1470 level, and really what has been the bull case for gold has been negative yielding instruments, makes gold, besides you have to pay for storage unless you put it in a coffee can, there's no negative yield. You don't have to pay anyone to hold your gold, like all the bonds that are out there trading in zombie land territory that we haven't seen, and I think we've ever seen negative interest rates in the history of mankind. Anyway, those are a few of the thoughts I have. You bury it. Ziggy, what's your address again? Okay,
Coach?
DJ. Huh? Yeah.
Good morning.
Hey, buddy.
How are you?
Good. How about you, Steve?
More than 15 trillion worth of bonds in negative yielding territory, by the way.
15 trillion. Yeah, I mean, you
Trillion,
know,
yes.
when you get to trillion and stuff, I can't even, you know, wrap my head around it. I'm only, and you know why, Steve? Unlike you being a millionaire, I'm but a thousandaire. Anyway, you could have lots of thousands are pretty good, but you know.
I can tell you one thing for sure.
What?
Besides the fact that it's obvious, a huge sign that the economy is nowhere near where it should be, and the regular function of
Yeah.
the global economy has completely been distorted.
So we're probably witnessing the end of the fractional reserve
Reserve
banking
banking
system, huh?
might be the case, but one thing is for sure, there is definitely going to be some kind of reset and some kind of a change of the current market within the next few years. Now,
Yes,
no,
and we know why Christine Lagarde is on the scene. She's the
yeah, I don't think we can easily,
reorganizer.
I don't think we can easily predict the kind of changes that we're going to see. But I'm pretty sure that within the next like 10, 15 years, we're definitely going to see some, major changes. Also, there is no doubt that if we want to look at bonds in isolation, the fact that holding perpetual zero coupon bonds, for example, um, makes absolutely no financial sense, is proof that we have a huge bubble going on in bonds, simply because the only reason that bonds can be bid at such prices and yielding what they're yielding is because there is certainty among the people that buy them that they can offload them at a higher price. But that is the
Right.
definition of a bubble, right?
Yeah.
Buying something that you know is extremely overvalued just because you have the certainty that somebody else will buy it off your hands at a higher price.
Yeah. Then musical chairs start.
Exactly.
Yeah. The music stops. So, is Blake on, or you want to take over the screen, Steve? And
Oh, I'm here.
I
We
just
gotta just cut Steve off, because if not, he just keep going.
I learned from the professor.
Yeah. So no, it's great. But you were talking bonds, and I'm glad you brought them up, because this is if there's anything that in my opinion is going to be moving the markets today, it's going to be the bond auction. So if you remember, well, maybe you don't remember, if you were wondering why yesterday, and we were in the chat room yesterday, and we were looking at the 10-year, and this is the bonds,
The note.
and
Yeah.
I'm sorry.
Yeah, the note contract.
Yeah. So if you want to know why the bond market turned yesterday, it was there was a 10-year auction yesterday, and we were watching yields right down here, like right at this level, and I was saying in the chat room, like, look, if the take up on the bond auction is a little light, then we're going to see a rally in the dollar yen, and we're going to see a sell off in bonds, and that's what we got. And you have to think about the reason why the bond market has been on a tear. This is the 10-year. Okay, we've been on a tear, and we're approaching some pretty technical levels here, and you can look at Bun's the same thing. We're just pulled up a chart of this a week and a half ago, showing the blow off top here, and now we're at pretty lofty levels where investors are like, from a risk reward standpoint, they're like, yeah, I don't know if I really want to, I really want to pay up these prices. Well, today, if you have not looked, we have a 30-year bond auction today. So the 30-year bond auction is today, and it's going to be interesting to see what the take up is on that as well, because if it comes in a little light, you're going to see yields rally, bonds sell off a little bit more, and that in itself might spark a continued rally in the S&P. Now, Steve probably has a few things to say about the S&P, because I know he at least was short or is short. We're approaching that 50% retracement. Maybe it got stopped out. I don't know, but anyway,
I got stopped out at break even, but thankfully I took profits only on one third of my position when I was 1.6% in the money, so it wasn't completely.
wasn't a complete loss.
No.
Or
I
waste of
took nice
time.
profits on one third of my position. The rest 2/3 got stopped at break even.
So I got this brings up a couple questions, because I got asked, hey Blake, have we seen the top in the bond market? And I'm like, I think near term we have. I may be wrong, but I think near term we have. But the question is, longer term, have we? And I don't necessarily think we have. I think bonds can continue to rally and yields continue to drop. When you have the whole world is racing to zero, quite possibly negative rates, and we're seeing the RBNZ already say that they're open to negative rates. You have to realize New Zealand and Australia, they had the highest rates 10 years ago, not of the G10, not necessarily of all central banks, but they were running around 6 to 8% interest at their central banks. Now they're at 1%. And if you look, our interest rates are higher than Australia and New Zealand. This was complete opposite and way exaggerated 10 years ago. And you know, I have way more to say about that on this weekend's webinar for Trader Fest 2019, which you guys have probably signed up, at least most of you signed up, and I'll be talking about that later this, you know, obviously on Saturday. But in this race to zero, I think bonds can continue higher, yields can continue to drop. I just don't know if they're going to do it yet. And this, remember, we are in August. It's a slow month, very illiquid. Markets are being moved by tweets, and there's not a lot of liquidity. I would not be surprised if we continue to rally in equities back towards the 50%, if not the 618 retracement, maybe even all the way up here to this previous support zone, you know, maybe around the 2950 level. Keep in mind that the S&P, as Dale pointed out, we held the 200-day moving average, but we also created a lower or a higher low. So we, you know, we've seen this bounce back in equities, and remember, we are in August, we're in the summer doldrums. I wouldn't be surprised to see, you know, bonds pull back a little bit, yields rally, stocks bounce. You know, it's going to get all the bulls super excited that we're going to hit all-time highs, and then we're going to head into the fall. And going into the fall, if we take out these lows in the S&P, these lows right here, this is where I start thinking, okay, the bond market's probably going to hit a new high. But I think and this is just me imagining things, and this is just me kind of where's my drawing tool? I'm going to draw this for you guys.
By the way, Blake, I put the link for people that want to register for the Traders Fest to hear your presentation. I put it in the chat.
Thank you.
For people that haven't done so.
Great, thank you. So if I had to imagine what's going to happen the next few weeks, is we're going to do this. This low is in. We're going to be doing this, and then something like this, you know, maybe a little bit more exaggerated or whatever. And then going into the fall, you know, it's going to look something like that. That would be my guess. And then you're going to go, oh, head, shoulder, breakdown, retest a major trend line. You know, if I had to guess all of that, that's the way I would imagine it. Just remember, we are in August, unless there's a catalyst to drive us lower, which there could be. I mean, you know, I'm not saying that there can't be, because, you know, in this world of you know, tweeting and, you know, the U.S. president that's in office right now, things can happen, and they can happen quickly. So I'm just I'm hoping that we get a little bit of consolidation here, you know, through August, and then things start to open back up in the fall. All right, but for right now, and I'm talking, you know, I'm talking like today, and the next couple of days, I think a consolidation and risk, maybe a little bit of move higher here in the S&P is possible. Like I said, I think that we can break some of these fibs and get bulls excited again, and yields are gonna rally, and bonds are gonna sell off. And you know, you know, I look at this 10-year. Let's go back to the 10-year, you know, bond market. Pull up a weekly chart. You know, this is a hell of a recovery here, but high to low. Okay, you know, we overshot the you can see here. Damn it. I'm trying to grab my, why can I not grab my fib? Oh, that's annoying.
Any chance you locked it by mistake? If you right click on it. Unlock, yeah, you locked it.
Oh, I did, okay. So let me grab the, Okay. So we hit the 78% retracement. Thanks, Steve. We hit the 78% retracement. And like I said, I think that we can continue to rally and maybe even, maybe even see, this going into the fall. But I think right now, this, we're obviously a little overbought. We'll probably pull back, consolidate a little bit in the bond market before making another move higher. And again, just thinking about what we've seen over the last couple of weeks, S&P pulled back pretty good. We got a little 8% pullback, okay, from the highs. Probably end up consolidating before figuring out where we're going to go going into the fall, and which I think I would assume is lower from here, based on the trade war, and just obviously if we rectify the trade war issue going into the fall, that's a different story, and then things are going to change. But I don't envision that, and but that doesn't mean that it can't happen. I'm just, again, I'm just trying to think ahead. So today, the focus is the 30-year bond auction today, and that comes in at 1 o'clock Eastern. So that caused the move yesterday. It caused some volatility yesterday. It caused that little the little recovery in the U.S. dollar Japanese yen right here, okay, and that could create a little volatility in the dollar yen and also the S&P and some of the other yen pairs. And by the way, I want to mention this really quick, and I don't want to take too much away from Steve, but if you look at these daily charts and you go over to like the euro yen, we had this break below the 2019 lows, okay, broke that, popped back up. We're trying to hold. Pound yen still trading heavy, of course. The Aussie yen, we held off 2019 lows. New Zealand yen, false breakdown below the 618, but we are still broken down though. The Canadian yen, we broke down to new trend lows. We held the 78% retracement. If we pop back above 80 yen on the Canadian yen, that could be a bullish sign for the pair as well. So, and again, if you're just thinking about in the month of August, you take some of these yen pairs, a bit of a recovery before another plunge, a bit of a recovery, the next couple of weeks before another move lower and retest of those lows. This seems very likely to me in most of these yen pairs, but we'll have to see how bonds react. And I think bonds are going to be the catalyst. A drive up in yields and a pullback in the bond market will push these yen pairs higher, in my opinion, and it'll also push risk higher. So with that being said, I'll leave all the other pairs for Steve. Steve, how you doing today?
I'm good, Blake. How have you been? I just want you to keep in mind that since the internet is down in the area, they're doing some repairs. I'm on my 4G router.
Oh.
Speed seems to be good, but I know that Zoom is a little bit sensitive to fluctuations. So keep an eye on. I'm gonna write to you if for some reason I have problems with screen sharing or whatever.
Oh, okay. I didn't know they're working on your internet. Are they feeding the gerbil farm again to get the wheels turning to your internet?
The good thing is that they're finally installing fiber. So at some point in September, I'm gonna have much faster speed.
Oh, very nice, very nice. Indeed. When the rest of the world's going 5G, you're going to have Ethernet cables. That's great. Just kidding. No, that's great. I know. No, I joke about Athens has actually technology's pretty good out there. All right. Well, it's more third world over here where I live than where you live. So,
yeah, but you live in a rural. Do you want to cover, because it's just 5 seconds for initial jobless claims?
Oh yeah.
215 forecasted. There we go.
209. You
Yeah.
know,
So yeah.
it's basically in line. Nothing's
So
going to
basically in
happen.
line.
Yeah,
Indeed.
nothing's going to happen. Everything's just going to be bouncing around and should be fairly slow. All right, Steve. I'll turn it over to you, and I'll make sure I'm keeping an eye out for you guys.
I'm here too,
Okay.
Blake.
All right.
So
Thanks, Coach.
good luck.
All right,
I'm
thanks.
grabbing
And
it soon.
you
Thank you,
guys.
Blake.
Bye-bye.
There we go.
You're showing data flash. Yes. Okay.
Okay.
You're good.
Okay. Let's see. Let's hope that it doesn't, it doesn't freeze, because I know that Zoom is a little bit sensitive, and as I said, I'm on 4G.
Okay.
Anyhow,
Well, I tell you what, bro. I won't take a nap for the next 20 minutes.
I would appreciate that.
All right, bro.
So, Coach, first of all, how have you been?
Good, Steve.
Second of all, do you have any special requests from where we should start?
I just want to tell everyone to make sure that they have some type of footing in their shower, because I actually took a spill. You know how you read about old people falling in the shower?
Trust
I
me,
actually fell in the shower yesterday.
it doesn't only happen to old people, trust me.
I'm washing my feet. I still think I'm 25. I could stand on one foot. Anyway, I think the most important part of this
You're 65 and you think you're 25. I'm 39, and sometimes I feel like 55.
Yeah. So any chance, I know, of the yen surprising people with a low that I think would correlate to a rally in yields. Anything that you see on the, because I think that's important, because everything went up because of lower yields, right? I mean, that's part of the bullish argument for metals and et cetera. So if yields start to climb, that might be competition for things like metals.
First of all, we have to put everything in perspective. So let's begin by the following. Can yields climb from here? Answer, absolutely yes. Second question, which is even more important.
How much?
If yields start climbing from here, what kind of a move are we going to be talking about? Are we going to be talking about an impulsive move or a corrective move? By the way, if you remember, I have been
You always have to start thinking after a smash like this that it would be, a short covering, long liquidation in bonds and corrective in nature.
Yeah, I mean, it's pretty obvious that bonds were really, really overdone in the short to medium term. Okay, now, does this mean that since we saw some attempt of a reversal yesterday, by the end of the day, that we're moving lower from here? No, but there is a decent chance that now that we've seen these moves, people that have been riding this move higher are going to start taking some profits. And as you know, that on its own is enough to cause some kind of a corrective pullback. Now, the question is, where are we headed from here? And the answer is probably in the medium to long term, the short end up until the 10-year is probably going to remain very subdued, having to do with yields. Personally, I still think, if you remember, we had the discussion, it was probably more than a month ago. I think that there is a good chance that within the next few months, we're going to see the yield curve really, really steepen. And the reason I believe that's the case is because, as you very well know, it's not easy for the Fed or any central bank to control the long end of the curve. And my personal belief is, if it's going to be one thing that the Fed and the rest of the central banks are going to end up being successful, is creating inflation. I know that there are a lot of deflationists out there that believe that we're not going to have inflation. My first answer to that is that we do have inflation. The only difference being is that the inflation that has been created during the past 10 years has not yet spilled over mostly on consumer prices. But we do see inflation. I mean, just look what's happening with stocks. Look what's happening with bonds. Look what's happening with
Real estate.
real estate, with expensive artifacts. Anything that is for the fat wallets. And at some point, that's going to move to consumer items. So I do think that eventually we're going to see inflation, and we're going to see a lot more inflation that the central banks want to see, and that's when they're going to officially be 100% failed. Now, nobody can really time that, but when the market starts sniffing that, we're definitely going to see the yield curve steepen, because even if the short end stays very well bid, nobody will want to be holding like 30-year bonds, right? I mean, why would you want to do that?
Well, more people would want to hold something with a 2% yield than a negative. That's the only argument I could come up with.
Yes, that is very true. But when you know that the market starts thinking that in general fiat currencies are going to be depreciating against every tangible asset, why would you want to hold a promise so far into the future that you're going to get back dollars, when you know that just by inflation, that promise in 30 years from now is going to give you back a lot less than you actually initially paid? Because don't forget that, the more we move to the long end, the more inflation matters, and has it all, right?
Well, I don't know. I have a little different, more positive outlook on marriage. The long end. 30 years, the promise, 30 years, it's going to cost more. Okay.
Now,
anyway.
speaking of yields, and if we want to have a look at the 10-year before we go to the rest of the charts, I can tell you that we did hit the 127% extension of this last rebound higher, so a nice technical level. We also, saw a healthy move lower from a triangle, more or less what you would expect. And yesterday's hammer, after hammer and key reversal, indeed show that we might have a nice rebound from here. Of course, you can never be certain with a correction. We might end up having some type of a consolidation that price is not going to be doing much.
Is this candlestick formation the opposite of a morning star?
No, it's actually just a hammer key reversal, nothing else.
Okay, all right.
But nothing else. Not that it is something to dismiss. When you're in a strong downtrend and you see a daily key reversal, and the hammer
Right.
is one of the four types of pin bars. Pin bars are not really reliable candles, but they can be when you find them at specific circumstances, like after a big move lower or a big move higher, especially if they're combined with that kind of a move that we saw yesterday, which is a key reversal. Why is a key reversal? Because
is the next day's candle critical?
It can be. Okay. Let me say it oppositely.
All right.
It is very helpful if the next day's candle shows continuation. It's not absolutely necessary, but it definitely enhances the reversal signal to see continuation to the initial reversal. Okay.
Got it.
So yes, it's going to be even more significant of a signal if today we see yields climbing higher and we close by leaving behind, like, let's say, a healthy white candle instead of consolidating more or less unchanged. But definitely, yes, we should pay attention to the next 1 to 3 days, because if this is to be a reversal to believe in, you should see continuation sooner rather than later. Because as I said, if we start spending days by consolidating and not doing much, that will then start pointing to a short-term stall of the market, but not a reversal. And this is a possible type of correction, right? Correcting over time instead of correcting, with a big price movement. Now, I have to also note a couple of things. Although I don't really care about the Euro USD and the cable, I haven't cared about them for some months, purely due to the price action that we've seen in them. It's not about, I don't have preferences. I mean, I would trade anything that's out there as long as, you know, they look like they can give me a decent opportunity. But I have to note that, first of all, so far today, we have an inside day to an inside day in the Euro USD, which is an interesting formation, because usually when that happens, and if for some reason we do close with a second inside day in a row, then it's going to be an interesting play to play the breakout from the initial spinning top that we had there, either above or below its lows. Equivalently, we see the cable that is now in its 2, 4, 6, 7th day of consolidation. I mean, this is the 7th pin bar that we've been registering. Obviously, not a bullish sign, right? I mean, when you see a pair like the cable that has been battered down so much, finding support at a nice triple confluence of supports, which is, you know, nice because you see that an important confluence of levels does work, but being completely unable to actually rebound from here, you know, I think it's in real danger of breaking down once again. 121 is a very important support level, and seeing the price action that I see, I believe that if the cable breaks below 121, there is no real resistance until we find the 161.8% extension of this last rebound high, which comes at 117.50. So the risk reward would still favor being long against the lows, just because, you know, it's an amazing risk reward. I mean, you're risking very few pips to make potentially a lot more. But personally, I think the chances that we're not going to break lower after consolidating in a tight range for 7 days is low. So I would say 70% chance in my mind is continue lower from here. Now, yesterday, thankfully, after seeing a huge move lower, I decided, although I initially said I'm going to wait, I wrote in the chat room that, okay, you know, I've had a move 1.6% in my direction within 1.5 hours, and, you know, it would be stupid for me not to take some profits, so I took 1/3 off on my short. Unfortunately, the other 2/3 got stopped out at break even, so I have no position anymore in the S&P. But I have to tell you that I'm going to be shorting it again. I mean, I made some profit yesterday, and I'm going to be attempting to do so again. Will I be doing it right here, right now? No, I won't. I would ideally want to see a move higher towards the 61.8. I wouldn't even exclude a retest of the 2960 key area. So far, we're still testing this resistance at 2890. Can we get rejected once again from 2890? Yes, we can, but I wouldn't bet on that. Okay. Now, if for some reason I see like a big move lower from here, then I might decide to chase it a little bit. But unless that happens, my plan is probably selling higher. But what hasn't changed is the fact that I still believe that either from here or from a little bit higher, I think that the S&P and the rest of the indices are probably going to be posting a lower low before we can discuss again of the possibility of seeing higher highs and new all-time highs. Okay, so at least from a technical perspective, that's what I expect looking at those charts. And it doesn't really change if you have a look at the S&P or the Dow Jones or the Nasdaq. More or less, you see the same thing. So, you know, there's no real point of me going through all those charts separately. Now, we can go separately through some of the European indices, though. We can definitely do that. And you will see here that the DAX, I hate Magic Mouse. You'll see here that the DAX actually found support at the confluence of the 50% fib from the last move higher and this horizontal support resistance area, roughly at 11,450. We are rebounding from here. Keep an eye on though, because this 11,800 is an area of resistance. We might find resistance there, or we might find resistance a little bit higher at 12,100. As I drew a couple of days ago, that we can see a rebound before continuing lower. So more or less the same deal here as we've been seeing with the S&P. I expect that this rebound will probably fail and then see one more low before we can reassess about what's happening here. More or less the same deal with the FTSE, quite a nice impulsive move lower. Seems to have stabilized exactly on the 200 daily moving average. We all know that, especially for stock indices, the 200 daily moving average is something that market participants are very closely monitoring and watching. So we might see like a large rebound from here, but I would still expect another move lower to at least retest this horizontal support area below 7,100. So, you know, that concludes a fast overview of what's happening here. Now, I don't forget your question before I go to questions that we have from our viewers, and your question had to do with the USD yen. And if you ask me what I think the USD yen might do from here, obviously, if yields bound from here, USD yen should have a hard time posting new lows. We've already seen that this horizontal support area has acted as support in 2 different consecutive days. So far today we have an inside day. But on the other hand, I'm going to tell you that so far what I see is a consolidation that broke lower and no real reversal pattern yet. So I would be very skeptical and very careful being long the USD yen. I'm not saying that it cannot work, but I'm saying that from a technical perspective, I would need a lot more evidence to start trying to fade USD yen weakness. Now, if we go to the DXY, you'll see that it has stabilized. Yesterday we had some kind of a reversal a couple of days ago. So far it has stabilized. It's retesting this 97.70, 97.80 support resistance area, in this case as resistance. It remains within this ascending channel. So, you know, that means that you need to respect the fact that it is a slow grind, but the DXY still ticks all the boxes of a chart that is in an uptrend, because we've had series of higher lows all the way, meaning you know, jumping you know, the gun and selling dollars across the board without having any real evidence is a dangerous proposition. I'm not saying that the dollar can be lower from here, but I'm saying that for me to feel more comfortable of selling dollars across the board, I would want to see a lower low, meaning that I would want to see this 95.84 level being taken out on a daily closing basis. I think that if that happens, then there is a very, very high likelihood that we're actually going to see follow through to the downside. Okay, now let me go through some of your questions. What's the level you're looking for? That was for Blake. Good analysis. Ziggy says he buries gold in the backyard. What do you think about Deutsche Bank dumping their investment workers, bankers, and getting out of buying stocks? Craig, this is the... I don't even remember what number of attempts for Deutsche Bank to actually, you know, restructure things in a way that is going to make the bank viable. All previous ones have failed. All previous attempts have failed. So I would say that I'm rather pessimistic. I think that one way or the other, Deutsche Bank at the end of the day is going to require some real assistance to survive, because Deutsche Bank can barely make do while we're still officially in expansion imagine what's going to happen when we go to the next recession. I think it's going to be a massacre. So I'm very pessimistic about Deutsche Bank. I don't think they're going to let it fail, because imagine if they let Deutsche Bank fail, it's going to be blood. I mean, a bloodbath having to do with financials and Europe. So one way or another, they're going to rescue it. But until that happens, I think there can be a lot more pain for stockholders. And the Deutsche Bank chart is one of the worst charts I've ever seen. Honestly, I mean, you can't easily find historically such a such a huge downtrend like the one we've had in Deutsche Bank. Hi guys, could you have a look at the 210 spread? It's at its lowest. I would believe that we are close to the point that the yield curve is going to steepen, but my personal preference would be the spread between 30-year bonds and 2 or 10. You know what I mean? So I would, on the spread between the 30-year and here's the link at the article about Deutsche Bank laying off 18,000 investment workers. Yeah, I actually know exactly what's happening with Deutsche Bank. My best man was working in Deutsche Bank for 12 years until a year ago. So I know it inside out. And yes, it's not pretty. It's not pretty at all. And there is a lot of turmoil inside the bank as well. I mean, a lot of people that haven't been supporting all those restructuring plans that didn't believe they're going to work, they ended up being correct on that. But I don't know if, besides being correct on that, they also, in essence, acted as, acted against, the odds of any of those plans working. Can you please take a look at WTI and Brent? Yes, absolutely. We are going to have a look at what's happening with oil, because it is indeed interesting. If you remember, I was stressing out in oil that there was a bearish case scenario that looked quite nice. And what was that? That was actually triggering that head and shoulders formation. And we did trigger that head and shoulders formation. And actually yesterday at the lows, we literally retested to the pip this double bottom. So definitely that was a huge area of support, and the market reacted to it, but we still remain below the neckline of this head and shoulders formation. So I honestly believe that the path of least resistance remains to the downside against this neckline. So I do think that a retest of this neckline should be a shorting opportunity, and it is what it is. Now, if for some reason you were short after the break of this head and shoulders formation, which we had marked on this chart since a couple of weeks ago, I hope you took some profits when retesting the previous double bottom, because obviously that was a key level. Now, having to do with the actual target of this head and shoulders formation, a measured target should bring us at lower lows at 48.25. Okay, so for these head and shoulders to be completed, a move towards 48.25 should take place at some point. Now, I want to have a brief look at the metals. First of all, you can see here that we have some divergence in gold. Gold did stall at the psychological 1500 level, but personally, I don't believe that it's done. Same thing with silver. If you remember, when we were assessing possible upside targets for silver, I had given two targets. One of them was 1725, this horizontal support resistance area. If I zoom out, you can see how many times it has acted as support resistance for the market, and that's exactly where we stalled. And the second target was 161.8% extension of this move lower with 50% fib, both of them roughly at 17.5. So the first area actually got rejected, was the one that gave us this rejection, but I do believe that 16.5 should be a strong area of support from this point on. So I do think that buyers are going to be stepping in roughly at 16.5, likely pushing silver to a higher high from there. For example, the $17.5 level that we were talking about, which is a confluence of resistances. So yes, we're seeing a pullback here in the metals, but so far I have no real reason to believe that we have seen the high that we have seen at top. And I think that if you want to be fading metal strength, you should be quite careful with your targets. You should be very nimble, because it's likely that we're just going to see a correction before a higher high. Okay. Let me see if we have more questions. Coach, do we have an interview, by the way, today?
We do. We have Kim at Price Action. Kim, if you're here, I don't see you present yet. Can you put something in the chat box or question box? I'm not sure what you're registered under. If you are
Jack's Palladium, yes, Anthony, I'm going to gladly have a look at Palladium, but I want to first answer a question. Bond yields too low for bankers, and he means that whatever restructuring is happening is needed. Yeah, I have an answer for that, and my answer is the following. If you remember, I was one of the few warning when yields were going up. Initially, the market, if you remember, when 10-year yields were climbing above 3%, everybody had started buying the banks, thinking that this is an amazing opportunity to buy banks, because obviously with yields moving higher, now the banking business model is yet again alive, and banks are going to be more profitable than they were because they can't make much by yields being so suppressed. Theoretically speaking, for a healthy economy, that is absolutely how things should function. There is one little problem, that we don't have a healthy economy, we have a bubble economy, and I'm not talking only about the US, I'm talking in general. The problem with that being is that theoretically speaking, if you do have, banks make most of their money by loaning out money at a higher yield than what they're paying to get money in. Okay, the business model is as simple as that. If we take the traditional banking, the problem though being is that when you know that many of the loans you've made are going to default if yields actually go higher, because everybody is over indebted and they cannot afford paying more than what they've been paying, that means that you're not going to make more money when yields climb higher. You're actually going to lose a lot of money simply because people are going to start defaulting on their loans. And that's why I think under current circumstances, any climb in yields might be initially again perceived as something positive for the banks, but it's going to be proven to be something very, very negative, because the banks are simply not going to take their money back. And they're going to have to write off many of those loans. So I think that you shouldn't be listening to what people say about how traditional banking is working, simply because we live in an era that there is absolutely nothing traditional happening out there with monetary policy and banking. So unfortunately, this is one more of the sectors of the economy that have been so much distorted. In essence, we have inverted the pyramid, that things work exactly oppositely than they are meant to be working. Okay, so I'm really warning you, don't believe that higher yields are going to be positive for the banking system, because it's going to prove to be a very, very negative event. Okay, now, Antonia is asking about what's happening with Palladium. Palladium was in a major uptrend. And then we had this move lower, which ended up looking corrective. There is one little problem. We got rejected before we made it to new highs. So that tells me that this move lower was indeed corrective, but it was only just the first leg of a larger correction. Obviously, this market, after being in a tear, needs a lot more time to stabilize, to consolidate. So one possible interpretation here, Antonia, is that this market might be in some type of triangle, which means that we might spend a lot more time oscillating between this 1280, 1270 area and 1600. So we might end up doing, first of all, in the very short term, this consolidation looks bearish. So I would assume that there is a very high chance that this little consolidation might be resolved to the downside, but in the medium term, we might see something like that take place. Okay. Bottom line, I think that the opportunity currently here in Palladium is probably buying when we get close to 1270, selling when we get close to 1600 until proven otherwise. Okay. So I think this is a market that will require a little bit of a but probably
okay.
needs time to stabilize.
You're breaking up a little bit.
Oh, sorry.
But it's
yeah,
interview time.
Okay, perfect.
Breaking up.
So do you have your guest here?
Yes, Kim is here. Kim Crumpus at Price Action Kim. It's going to be a great interview, Steve.
Perfect. Enjoy the interview, and we'll be back tomorrow, of course.
So if you want to learn how to scalp real short term, I brought the person in, Kim. I'm going to make you a panelist, and looking forward to hearing your voice. And then you just scroll your mouse underneath or above where you see a green share, and you click that. And then we'll be able to see your screen. Let's see, maybe I didn't unmute you yet. Yeah, that's what, okay. Now you're unmuted. Hi, Kim.
Yeah. Hey, Dale, can you hear me?
Loud and clear, Kim. Welcome to Face.
Hey, thank you.
It's
All
great.
right.
It's great to have you. If you want to share your screen, there's a little green box there that says share, and then we could see your setup. It's coming up right now.
All right.
So great. Okay.
You're up. $0.
Yep. You're up. Everything's there.
Ready to roll? Well,
Ready
Dale, it's been a while.
Yeah. Was the last time FX Street?
Yeah. And we've communicated, of course, on Twitter, but yeah, it's been a while. So thank you for inviting me again.
Well, you know, I respect what you do, and I've interviewed your guy. What's his name? Ken, I believe. Kevin,
yeah.
yes, Kevin, and he does a great job covering Asia and Europe for you. So Kim, you know, refresh my memory since it's been such a long time. How did you break into the field, and, you know, what were you doing prior, and what led you to trading?
Sure. Well, I'm a California CPA. I don't practice though anymore, but I keep my license. And about 20 years ago, yikes, I'm dating myself, I started getting into trading. And of course, I started with stocks. I traded my own portfolio for a while. And then I rolled into options, and of course, then into commodities, and then eventually into Forex. And I landed in Forex, and I really liked it. I had a lot of success initially, and then I went through a little bit of my own financial crisis in 2009 when we had the global financial crisis, and then came out from that and turned my trading around, completely became more of a day trader. And I'm actually a day trader, and that's kind of what I teach others that are interested in.
Okay, so it took you a while to find what trading style suited your personality best, and that's what Jack Schwager, when I asked him, I said, Jack, what's the most important piece of advice you could give traders? And he said, find a style that suits your personality. So it was a process for you to get there. Did you have any mentors yourself, or influenced by any books that kind of lit up a bulb for you to make these breakthroughs that you've made?
Yeah, I had a few mentors. I had, and of course, I love books, and Mark Douglas has to be my all-time favorite author of all time.
Trading in the Zone.
Trading in the Zone, The Disciplined Trader. Those are my kind of my Bible go-to when it comes to trading and the mindset aspect, since that's really key for me. And I think for most traders, it's really key. I think what If I had to say anything about it, what really changed me into a day trader, Dale, was the risk. Since I trade my own money and I trade my own portfolio,
Right.
I found personally I could not sleep at night carrying positions over. I was always mentally somehow distracted to wanting to look at charts. For instance, when I'm done with a session, I don't look at charts.
Yeah.
I go on my day and enjoy myself, enjoy life. And for me, that works really well. I was also concerned about brokers in the Forex world. As you know, when they adjusted the Swiss franc, what was it,
Yeah.
in 2015,
Yeah.
a lot of traders I know in my own group, their accounts were wiped out if they were holding on to positions,
Right.
and unfortunately got caught in that snafu. So I just found, from a risk management perspective, when you're trading your own account, different, if you work for an institution or a private, family, it's different, and you're going to trade a whole different way. But trading
And
your own money, it's different.
yeah, and it depends on your stage of life. When I was younger and I was on the floor, I wanted to trade all day. As you change and life evolves, money starts to not become your most important currency. Time, you have more of a perspective that money comes and goes and time is gone forever. You don't want to spend it sitting in front of your workstation 20
Boy,
hours a day.
3 cheers to that.
Okay, so lifestyle,
Lifestyle too. Yeah, it's definitely a lifestyle change for me.
yeah.
Yeah,
So I'm curious, before we get to the charts,
sure.
I think trading, I don't know if you agree with me, 90% of it is in our heads. It's
I totally agree.
philosophy and psychology. And I'd like to know, what you stress, certain types of philosophies and psychology, which, you already expressed the advantages of day trading.
Mhm.
How do you help people overcome the number one thing I think is fear?
Yep.
And to me, preparation is a great antidote for fear. And, people getting to the point where they go, well, I hope this one works.
Yeah, I agree with you as far as preparation. I am super huge on preparation. In fact, just referring back to Mark Douglas, in his book, Disciplined Trader, I believe it is, and there's probably some crossover in Trading in the Zone, but he talks about how you have to get your technical foundation laid down first. That's like kindergarten for a trader. Getting your technical, how you're going to trade, how would you trade it, how you're going to manage your trade. If I get stopped out, where's a reentry if I want to take one? Has anything changed in my trade plan? So those things, I believe, are the foundation as far as being prepared. I have a whole checklist of things that I like to do. I call it my trader's checklist to success. And it's all about the preparation. It's getting that good night's sleep. You have to be well rested. I have to be well rested.
Oh,
Or
yeah.
I can't do what I normally would do, even
It's
though I
almost like
think
you
I
have to
might.
be an athlete. You have to be
Yes.
in a peak performing state to do this. So when you talk about this preparation, is this part of a journaling process that you
Yes.
recommend traders do, and you kind of supply this outline and a checklist before they're clicking their mouse? They have to answer all of these questions about a
Yes.
trade?
Yes, absolutely. It has to meet the criteria. The criteria that I use is extremely simple. In fact, I have a gentleman in my group who was telling me on our webinar yesterday that he's turned his trading around following my trading methodology. And he's also brought in his 20, 21, and 23-year-old daughters, and he's taught them to trade. And he said he was astounded at last month's, their performance was, really good in July. And so he said they can follow it, and he's keeping it just super bare bones, laying down the technical foundation for them. So yeah, I keep it so simple that even I want to say an 8-year-old or a 10-year-old who is, adept at their own computers can do this. It's so straightforward.
Okay.
Of course, the mindset, like you said, is 90% of it, and that's where traders get tripped up.
All right,
So
give me a few examples of how you see traders tripped up by their own psychology.
sure. One thing, they put on too big of a position, and
Okay,
so
leverage.
yeah, leverage. It's huge. That will trigger you into so many different mindsets, especially if you have issues around money. And the other thing is, if you have not done any kind of personal work, whether it's, I've done a lot of therapy, so know thyself. You have to know yourself, because you'll act out these unconscious beliefs on the trading screen that can really mess with you. Like Mark Douglas talks about the boom and bust cycle, which so many traders are in. I used to be in that cycle. That was my trading style. I would trade really well, and then boom, I would decimate it.
Kim, my psychiatrist diagnosed me as a dyslexic, agnostic, insomniac.
Really?
Because I would stay up all night
Ooh,
wondering whether or not there was really a dog.
a dog?
I'm dyslexic.
Oh.
That's part of it. So anyway, it was a
Really?
joke.
Okay, I'm like, what? It doesn't sound like my
Yeah,
therapist would say
yeah.
something like that, but okay.
Anyway, I'm a Gemini, so I'm just
Oh,
a
God,
schizophrenic that
you
could
are?
be long or short, whatever.
Oh, God.
Flexible anyway. So
That explains a ton to me, right there. My best friend is a Gemini.
okay, so
So you can do many things at once.
Yeah.
And you jump from thing to thing. And you've got a great personality. You're able to connect with a lot of people, clearly, because of what you do. You're really good at it.
let's not talk about the downside.
Okay.
All right. But anyway, thank you, Kim.
Well, I'm a Capricorn. I'm a Capricorn, so I'm just the complete opposite. I am like
that means we're compatible.
I'm the poster child for organization and structure.
Oh God. You would kill me if you saw my desk.
Okay. I probably would.
All right.
I know what it looks like already.
So we have this thing about leverage, and I wrote a song, use less leverage when you trade the markets, use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. So, the other question is, really, don't you run into a lot of people for different reasons? But I mean, let's talk the financial suitability reason. A lot of people are trying, they're trading micros and they're trading too big, and they really shouldn't be taking risk at all. As being a registered person, which I was many years ago, I had to tell people, and I did tell people, that this check you're funding the account with, I want you to imagine striking a match and lighting it up. And if that makes you nervous, it's not risk capital.
That's right.
What do you find with people that, do you ever tell people that maybe, until you're, do you tell people it shouldn't be it has to be risk capital, and it's so much easier to make money with money than try to make money undercapitalized?
Absolutely. I agree with that 100%.
You have like a marker for, a minimum that people should be able to, in their mind, mentally write off before they open an account?
Yeah. I mean, I realize there's a lot of people in this space, I want to say, that don't have the money and should not be trading, realistically. Yeah. And so I don't encourage it. And in fact, I mean, really, if you want to start to learn how to make money, you have to come in, I believe, with at least $2,000, and you have to be able to say sayonara to it, because it could go away until you learn the lessons, but you have to trade really small.
Okay.
And I think I've seen you say this out on Twitter a few times. You've been asked, I'd like to trade for a living, and you say something about living under a bridge.
Yeah. They say,
that is so that is
Well,
definitely where it's at, because people come and say, well, how much will it take? And I'm like, are you kidding me? How do I even know that you have, one, the mental capacity for this business,
right.
two, the financial wherewithal to withstand shocks and adjustments and loss and so forth? Have
Yeah.
you done for step one, which is become, like Mark Douglas says, really technically skilled at your, job? So I say, why put the cart before the horse?
Yeah.
You have to learn, you have to go through the experience. And as you've mentioned too, and I mentioned, that experience takes time.
Yeah. What do you think it is? I mean, let's talk about you.
Mm-hmm.
How many years did you put in of riding the up and down roller coaster and finding your sea legs in the market? Ballpark, what do you think it took you? How long?
I want to say 8 years.
Okay.
I want to say from 2001, when I started, really got serious and put money behind myself. Yeah, it was 2001. The thing was, Dale, with me though, I was more of a carry trader, and I did the interest and the
Right.
capital appreciation on positions, and that just, I got caught in a firestorm. And so I had a whole different way of trading, but I would, like I said, be obsessed with what my positions were doing overnight. And so in 2009, when I had a reckoning, I said, I can't do this. I can't live like this. It's a lifestyle choice now. I'm either going to throw the towel in at this point, or I have to figure out how this would work for me. And that's when I completely shifted how I viewed the markets, and I no longer see them long term. I see them in a session. So I see
Right.
the New York session, and that's it.
Every day is a new day.
Every day is
I
a new
love that.
day.
Yeah, and it should be even if you're a position trader, but every
Yeah.
day is a new day. So since you are a scalper, why don't you tell us about what kind of time frames?
Sure.
Are there multiple time frames that you focus on as a scalper?
Nope. We use one time frame, the 15-minute. That's it.
Interesting. Okay.
And I do that for a very particular reason, which is to eliminate some of the overwhelm when traders get into analysis paralysis, because what looks like something on a 5-minute chart may not look like something on a 30-minute, a half hour,
You're right.
an hour, a 4-hour, and a day. And then you start getting into the weeks and months, and then you're like, whoa, wait a minute. Should this trend line be on the 30-minute or should it be on the 1 hour? Or so 15 minutes, that's enough time to think about things, get into your positions, know your technicals, and that's why I chose it.
Okay. And so you have a 15-minute time frame. I see there are no indicators. So
There's no indicators.
So all I see is some boxes and some dotted lines that I think what they do signify the prior day's range.
Yes, that's exactly what those blue lines are. The prior day's high or low.
And what are the gray boxes?
So the gray box is just my, from this point forward, is what I want to look at, and my London session traders look at, which is the beginning of the Tokyo session. So I have 3 questions that help me plan my trades. And the first one is, what did price do overnight? So if I'm a London session trader, I want to know from this point, the start of the London session, what did price do? And if you just, and this is how I do it, you draw it out so people get a visual, because there's visual learners, there's audio learners. Visual, I'm very visual. I'm all about the look of things. So this shows the London session trader, hey, I've got a range. I can look for breakouts. Now I can look for a break here, which price euro did. It broke to the upside, and give them a trade there. Okay. And then price comes back into the range. It didn't do one of our technical things that we like price to do. It only moved up 12 pips, came back in. So then there's an opportunity to sell it if it breaks the low. And now you can see price is back in the range. So as a New York session trader, I walk up to this right now and I go, wow, this is just ranging. There's no move like this, no nice move with setting up for pullbacks. You know how we get right before the New York session begins? Yeah. To get positioned into this trade. There's none of that going on in the euro right now. Okay. So it's ranging. So there's no trading opportunities.
Okay. Yeah, I agree. I mean, how do you teach people that it's okay to wait, it's okay to miss trades, and to be patient?
Well,
It's hard to teach, isn't it?
that's hard to teach because some traders want to jump in as soon as they see price, like probably whipping up like this. What do you mean I can't trade this?
Yeah.
No
How
trade,
about
right?
How about, a lot of people think they have to be portfolio type traders, Kim, and, I use the example that I know guys from the CME when I was a runner on the floor there
Mm-hmm.
that never left one pit. If they were cattle traders, they were cattle traders for their whole career, 30 years, and they did quite well just knowing one market like the back of their hand.
Yeah.
Do you find that people, I know I do, lose focus if I have a wandering eye into different markets and don't stay focused on what brought me to the dance?
Yeah, I agree. That's like, distraction and shiny object
Do you
syndrome.
recommend people follow how many markets at a time when they're starting off?
Well, when you say markets, in this case, I would call them currency pairs, and
Yeah,
we use
okay.
the 10 that are listed here, and that's
Okay.
all we do. Now, I have traders that will wander off the ranch, so to say,
Yeah.
and what happens is they get themselves into trouble. 10 is so, I mean, if me
That's a
at my
lot for
level,
me.
yeah, that's a lot to look at, right?
Yeah.
You can do it with just 10. So
When
you
you
don't
find
need
yourself jumping around between those 10, I notice that when I'm doing a lot of screening,
Mhm.
looking for things, that normally it's because there's not really, when I come back down to it, it's because there's nothing to do, because the good trades smack you right in the face. You can't ignore them. So when I'm looking around at a lot of different things, that voice in your head, I have to find a trade. I want to find a trade. And if you're really searching hard for a trade, it means there's either you're not seeing it or there's nothing to do.
Yeah, I agree. And that's probably one of the hardest things for traders I know. It was hard for me initially, way back in the day, was to just sit with, hey, there's not an opportunity. Like there's nothing to do on the euro. And like I said, this move right here would produce anxiety in a lot of traders because they would think they were missing the move and they would fall into that FOMO, the fear of missing out. Whereas I just go, hey, there's nothing here. I don't want to risk any money. I think for me, and I know some other people are like this, if you've taken some big hits and you've survived, you're a little more tame. You're, what Mark Douglas says, which is you become rigid in your rules and you're flexible in your expectations. And I kind of live by that. It's like I find that I can look myself in the mirror at the end of a session and say, you know what? I followed my rules. And yeah, like yesterday, I had a losing day. I've had 2 losing days actually this week. So for me, I can look at myself in the mirror, go to sleep at night and say, you know what? I did the best job I could. I followed my rules. The market did what the market did, and that's the outcome. It is what it is.
Okay. Do you have using a 15-minute chart, like an average risk per trade and an average what you're looking for to take the risk?
Yeah. So I'm looking for, my pip loss is very tight. So the euro is the tightest one, and that's an 8 pip. And the highest is going to be the crosses, the, pound yen, the CAD yen, et cetera, will be 12 pips. So it goes between 8 and 12. And the other ones fall into the 10 pip range. I'm looking to take a minimum of 1.5 to 1. So,
okay.
Yeah, you've got to get at least 1.5 to 1 in your positions.
Okay.
Otherwise, if you take a bunch of losses, you might not be able to recover as quickly.
How did you choose that particular number for a stop on the euro? Was there back testing involved, or how did you come to decide on that's our risk in euro?
I did do some initial back testing on it, but I remember I used to trade, because I was more of a carry trader, I trade with these wide stops, or a position trader. And I traded with wide stops, and I personally, I couldn't take the swings mentally of watching positions move around that much. So I decided, you know what? I want to do what Paul Tudor Jones kind of advocates, even though on a scalping level more, which was put your toe in the market. And if the position is going to run, you'll be in it. And if it's not, you're going to be told quickly. But I also followed that up with, I have certain re-entry rules. So even if you get stopped out, let's just say the broker spikes you, there's rules that I have that traders can follow to get back into that move if it does turn around and goes their way. And they learn those re-entry rules as well.
Okay, well, that's a great segue for people that would like to learn about your reentry rules and everything else you have to offer, Kim. If you want to go to your website, we all know that people could follow you on Twitter at Price Action Kim, and maybe you could show what's happening on your website and how people could get involved with you.
Sure. I'm trying to think. Let me see if I can call it up. Hang on. Just give me one second.
Sure.
Let's see. I should have had this ready.
That's okay.
Here we go. Whoops. All right. Do you see that?
You'll probably have to unshare and then share again.
Okay. Oh, okay. I see it now. All right. There we go. Now do you see it?
You started the screen share. There we go. Okay.
So you should see Price Action Traders Institute up here.
Got it.
So I have two things: the Forex Trading monthly membership, which is a more hands-on involved. You do the planning sessions with me 3 mornings a week, Tuesday through Thursday, and Kevin Wednesday and Thursday mornings. And then last year, this year actually, I just released it in April, was an online course for traders who want to do their own study. Takes beginner traders through advanced traders through my entire process and learning, and they can do that on their own. So,
okay.
And then they can also go, if you scroll down here or you go to YouTube, I have YouTube videos that I also post on my blog. So you can watch a lot of free stuff out on YouTube that I've posted as well.
Okay, well, you have a great demeanor, Kim. I could tell how disciplined you are. You're very fortunate that was inherent in your personality. A lot of people have to create a new paradigm to do that. So
yeah, they do.
I appreciate your time and hoping that your efforts, that pips rain down on you and everyone your voice reaches and your teachings help. And proud to call you my trading warrior sister, Kim, and I respect you and really think that you're one of the few that are out there telling it like it is to people, giving it to them straight. And you could be a great trader, but I like people that have great ethics, and you qualify. So
thank you, Dale. I appreciate everything that you do for all the traders out there, because I know you give them a lot of wisdom and you really care about them, and it shows through. And so thank you again for inviting me, and I'm enjoyed talking to all of your people.
All right. Well,
thanks,
everyone, that's a wrap, everyone. You're welcome, DJ. DJ's thanking you, Kim. A lot of people thanking you, and videos should be out in a few hours. So that's a wrap for us. See everyone tomorrow. See you, Kim, for TGIF. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios.